I'm a tax accountant, and every single year I watch people overpay the IRS because they forget the same handful of deductions. None of these are loopholes. They're legitimate write-offs hiding in plain sight. Let's go through the ones people miss the most. First, one big misunderstanding. A lot of people think if they take the standard deduction, they can't deduct anything else. Not true. Many of these are above-the-line deductions. You get them even if you don't itemize. So don't skip them. Number 1. Last-minute retirement in health savings contributions. You can put money into a traditional IRA or a health savings account after the year ends, right up to the filing deadline, and still deduct it on last year's return. The HSA is the one people forget most. Number 2, student loan interest. You can deduct up to $2,500 of interest you paid, and you don't have to itemize. People forget this one constantly, especially if they never got a form in the mail or if a parent made the payments. And here's where these live. This is Schedule 1, Part 2, Adjustments to Income. Student loan interest sits right here on line 21. Every line in this section is a deduction you can take without itemizing, and people leave them blank all the time. Number 3, for the self-employed, the home office. People skip it out of audit fear, but if you use part of your home regularly and only for your business, it's a real deduction. The simplified method is $5 a square foot up to 300 feet, as much as $1,500. Number 4, also for the self-employed, the business slice of things you already pay for, the part of your cell phone and internet you use for work, and your business miles, at 72.5 cents each for 2026. Track the business percentage and deduct it. Number 5, charitable giving you forgot. Non-cash donations, the clothes and furniture you dropped at Goodwill, count at fair value. So do the miles you drove for charity at 14 cents a mile. And starting in 2026, there's a brand new break. You can deduct up to $1,000 of cash gifts, $2,000 if married, even if you take the standard deduction. Number 6, for the self-employed again, half of your self-employment tax and your self-employed health insurance premiums. These are automatic deductions a lot of people and a lot of software leave on the table. If you pay your own health insurance and you're self-employed, don't miss it. And number 7, if you do itemize, the state and local taxes you actually paid. That cap jumped to $40,000, about $40,400 for 2026. And people forget to include the state balance they paid last spring when they filed their prior year return. That counts too. So put it together. The above-the-line deductions, retirement, HSA, student loan interest, your self-employed costs, and the new charitable break, you get even with the standard deduction. The itemized ones like state taxes and non-cash gifts, only if itemizing beats your standard deduction. Either way, don't leave them blank. And to be clear on who's telling you this, the tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience. So everything here is checked against the IRS sources. It's always educational, never advice for your specific situation. The bottom line, most people don't overpay because of some clever loophole they missed. They overpay because they forgot a deduction they already qualified for. Before you file, run down this list. This is general education, not tax advice. So check with a pro about your situation. Subscribe to the Tax Breakdown for tax rules in plain English.